Good morning, welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Tuesday, February 15, 2011. It's 11:30 a.m. Eastern Standard Time in the U.S., 4:30 p.m. in London. In Bermuda, it's 12:30 p.m. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL Instant Mail address is CATEX-TV. We've got some breaking news that just came in about an hour ago. Marsh McLennan came out with their quarterly numbers, and they actually they're quite impressive. They show an organic growth, organic revenue growth of 6% in the fourth quarter. Willis had reported organic growth of 4%, and Aon had organic growth of just 3%. So these are quite good numbers. Marsh said that fourth quarter profit rose to $203 million from $23 million a year earlier. Total revenue for the quarter rose to $2.8 billion from $2.6 billion. The company's consulting business generated revenue of $1.3 billion, up by 6%, while revenue rose 11% to $1.5 billion at the Risk and Insurance Services segment. So our congratulations again to CEO Brian Duperreault. He is doing one heck of a job there. We'll go to our main news. News coming out of London: underwriting losses at Flagstone's Lloyd's syndicates have widened now on the back of big claims that came in during the first half of last year. An underwriting loss of just about $18 million US was recorded by Flagstone's Lloyd's business in 2010, compared with a loss of only $480,000 the year before. Flagstone has laid the blame squarely on the feet of big events like the Chilean earthquake, that was a $5.3 million loss in Q1, and the Deepwater Horizon oil rig, which was a $17 million loss in the second quarter. Flagstone insists that overall 2010 was a positive year, despite the unprecedented number of international events which caused annual net profit to fall by more than half. Annual net profit was $97 million, dropped from $145 million. David Brown, the CEO, did say the year was positive. He noted that the geographical and strategic diversification that Flagstone employs worldwide provides the company with immense global opportunities. Actually, those numbers are not bad at all. Congratulations to them. Arch, down in Bermuda on Parleville Road, saw 2010 net income drop 4%, down to $816 million. That's not bad either, despite suffering a 42% decline in underwriting income, driven, of course, by the catastrophe losses. Their investment returns helped to offset some of that. We'll talk about that in a second. Underwriting income fell to $195 million from $336 million. That's a 10.2% drop in earned premiums to $2.5 billion. An 8.3% decline in claims costs to $1.5 billion. The combined ratio jumped to 92.5% from 88%. The investment side of Arch's ledger helped to mitigate the drop in underwriting income. Realized gains, net of tax, rose 80% to $247 million, while after-tax net impairment losses dropped to 83%. I'm sure there'll be more information on just what those realized gains were in the next day or so. Well, there's a lot of speculation in the London market about the venerable old syndicate Jubilee. Jubilee is claiming that it's not paying any attention to all the speculation, that they're concentrating on future growth. However, according to a number of reports, Jubilee is being the center of an auction led by the broker Jardine Lloyd Thompson. It's thought that the other London syndicate, Canopius, and of all people, the Ryan Specialty Group in Chicago, are among the front runners for the purchase of Jubilee. Jubilee only admitted that JLT has been appointed in an advisory capacity and that they're busy growing their own business. A spokesman said, as part of our long-term strategy, I can confirm that Jubilee appointed JLT to carry out a review of the business. As part of this process, JLT is looking at a number of options to facilitate future growth. Canopius refused to comment. Ryan Specialty Group did not comment, and JLT confirmed that it was working with Jubilee but didn't say anything else. More news from Bermuda. Validus Holdings is reportedly in takeover talks with another Bermudan, Ariel Re. This is according to a report in where else? The Insurance Insider. They always get the scoop first. The Insider is citing sources that claim that Ariel Re has invited Validus to undertake due diligence on the deal. Senior executives at both companies had no comment. Both companies were part of the so-called class of 2005 wave of companies set up in Bermuda in the wake of Hurricane Katrina. Ariel, founded by Don Kramer, is privately held. Validus trades on the NYSE. If Validus pulls this deal off, it would be the second big acquisition of a Bermuda reinsurer by them after their $1.8 billion acquisition of IPC Holdings in 2009. And a little notice bulletin on the Lloyd's of London website indicates that the CEO, Richard Ward, met with representatives from the China Insurance Regulatory Commission, the CIRC, in Beijing last week. Also included in the meeting was the vice chairman of the commission, Zhao Yanli. Dr. Ward is continuing Lloyd's preparations for writing direct business in China. They had received a direct license from the CIRC back in May of last year, and Ward's meeting with the regulators gave him the chance to update them on Lloyd's progress in China, including the implementation of a new IT system. Talks also focused around Lloyd's commitment to support the development of a financial and maritime hub in Shanghai by 2020. Speaking after the meeting, Ward stated Lloyd's continues to prepare to write business in China directly. The bulletin also noted that Ward attended a board meeting of the Geneva Association in Beijing. This is the first ever to be held in an Asian country. The association is an international think tank based in Geneva, Switzerland, for insurance and risk management issues. It's committed to stepping up cooperation with the Chinese insurance sector. During the meeting, Ward met with the Chinese Vice Premier, Wang Qishan, who praised the positive role of the Geneva Group in promoting reform in the international insurance industry. China is currently the 6th largest insurance market in the world, and it's expected that the Chinese market is poised to overtake the American market as number one, possibly as early as 2020. It's only in 9 years. They're going to have to come up with a heck of a lot of premium by then. Stock market in New York is down about 34 points right now. We'll go to a word from our sponsors. Well, this is an annual story, isn't it? Whenever there's a huge multi-trillion-dollar budget deficit in the U.S. and an American president submits a budget plan, there are always efforts to tighten up loopholes. And President Obama's budget that was submitted yesterday would increase the American tax paid by some Bermuda-based reinsurers. It would also clamp down on multinational companies using offshore entities for so-called earnings strippings. One of the revenue-raising measures proposed was, quote, to disallow the deduction for excess non-taxed reinsurance premiums paid to affiliates. A similar move was proposed in last year's budget. This year, however, the revenue target is even higher. Last year was $500 million. This year the president is looking for $2.6 billion over 10 years. Actually, according to my math, that's $260 million a year, so it might be lower. The measure would not single out Bermuda. It would apply to all non-U.S. insurance groups. If the plan becomes law, Bermuda groups with American affiliates who cede back some of the American insurance premiums to the parent company can expect to pay more tax. Bermuda market companies who'd have the most to lose from this change would be ACE, XL, and Arch Capital. Well, there's a lot of activity going on in Iran. Yesterday there was a fairly significant street protest in downtown Tehran. Apparently one bystander was killed. According to protesters there, the regime fired live rounds and tear gas at the protesters. Earlier today, the Iranian parliament approved by a very big majority vote the death penalty, specifically targeted at two Iranian opposition leaders. I might add, this is before the opposition leaders have ever been arrested. It was specifically named in the legislation that passed authorizing the death penalty. They have not been arrested, nor of course have they been tried, but in the event they are found to be a threat and are arrested and are subjected to a trial, just in case, the national government has given the authorities the approval to hang them. Meanwhile, further south, in Bahrain, at least one person has been killed in a protest, and in Yemen, further south, thousands of people are marching in the capital of Sanya, indicating that the regime must leave earlier than the current president has indicated that he would leave. So once again, this continues to roil around in the Middle East. Where it's going to end, nobody quite knows, but everybody has been predicting that President Ahmadinejad in Iran is ultimately going to feel the fire from these protests, and he certainly is feeling it now. To our final story, we've sort of been paying attention to this, and really it's something to keep in mind. Last year we ran a story how Aon's advisory panel, actually their research panel, was advising British property owners to become mindful of the environmental contaminants that might be left on their property by previous owners. And we sort of were scratching our heads because that's a well-established point of law in the United States. Apparently Aon was advising British property owners that because of EU directives, this would now become commonplace in England. Well, imagine how Chevron feels. Chevron purchased Texaco, an oil company. Of course, many people remember them. Purchased them some years ago. Texaco had huge holdings in Ecuador. Ecuador, by the way, is a member of OPEC. Very few people are aware of that. They produce oil, quite a bit of it there. After Chevron bought Texaco, the Ecuadorian government brought a massive environmental lawsuit and a number of criminal charges against Chevron, claiming that Texaco had polluted the Ecuadorian jungle and Ecuadorian river system for years and years with contaminants from their oil operations. But Chevron had stepped into the crosshairs and was now the legal successor to Texaco. And yesterday, a court in Ecuador told Chevron to pay $8.6 billion in environmental damages. What did Chevron say? They said the court order was unenforceable. They said they would appeal. The judge ruled yesterday that Chevron was responsible for oil contamination and asked Chevron to pay a legally mandated 10% reparation fee. This is far below an earlier award recommended by a court-appointed expert, and that was $27 billion, but it's still the highest damage award ever issued in an environmental lawsuit. Chevron said, we plan to appeal this and every other aspect of this illegitimate verdict and see to it that the perpetrators of this fraud are brought to justice. It's unknown who he was talking about, Texaco or the prosecutors. Well, we'll see. Either way, if you have liability insurance for Texaco or Chevron back in the 70s and up to the present, you better be checking your policies. Stock market in New York is down about 38 points right now. If we have any breaking news, I'll go back and tell you. If not, thank you for watching, and we'll see you tomorrow.